Hello, Uncle Jim here. Today I want to share with you what happens with early assignment when you sell stock options. I actually had a couple positions get assigned to me earlier this week, and I want to share with you what happened and what I plan to do in the future. So stay tuned. I'm sure you're going to enjoy what I have for you today. What is early assignment? Well, when you sell options, someone is actually buying the ability to either put shares to you or to call shares from you. So that's where put and call comes from. And they have the ability to actually assign those shares or force assignment at any time up through expiration. Now, most people don't do it until expiration, but there are certain instances, and I got caught by both this week. I'll talk about the specific examples at the end of the video. But typically, a couple of exceptions. First is ex-dividend dates, and I've talked about this in a number of videos, and it relates to the ex date for the dividend. And if you own the shares on that ex-dividend date, you're entitled to the dividend. And typically, you want to you want to own the shares the day before the ex-dividend date. So you have to keep aware of when the ex-dividend date is, and that relates to one of the early assignments I had. My Southern company covered call shares actually got called away, and these were in an account that I guess I had forgotten to actually add them to my planning worksheet. And the other situation was related to Ford, and someone actually put those to me on Monday, which that's the first time that's happened to me. I've sold probably, I don't know, 200 options, put options, that is. And this is the first time that someone has actually put them to me. It was the Monday before the Friday of the expiration, so it was still fairly close to expiration. But I thought I had a couple more days that I could actually roll those or close them. But Monday of this week, and they expire tomorrow, or would have expired tomorrow. They were actually put to me, and they were assigned to me, and they went into my account. And luckily, I had enough cash to cover it. But if I didn't have enough cash, then I would have had a margin call. And we'll talk about that a little bit more in detail. But how do you avoid this? I've been sharing with my patrons and the people who watch my videos that it's really important to have a planning worksheet or some way that you're actually planning your positions. Every week I do a new worksheet, and I plan out 2 weeks. I look at any positions that are expiring, and I add them to the worksheet. I identify them and color code them, and I try to manage them with plenty of time. Now, the Ford put option was actually in on that spreadsheet, and it still got put to me. So I need to probably change my plans and maybe look at more of the week before in certain instances. But again, this is pretty rare. Of probably, like I said, 150 to 200 puts that I've sold over the years. This is the first one, which is where it's been assigned to me early. So the planning worksheet. Now the Southern Company cover calls. I had missed one of my accounts. I have an IRA that I don't trade in as much, and I did not look at it for some reason. Didn't realize I had a covered call expiring. So it was also expiring this Friday, and I believe it got called last week. I'll have to look at the date on it. Um, Another way to do it is to do kind of the dispersed expiration dates, not to have everything expiring at the same time because it becomes more difficult to manage. I had that happen to me this past 2 weeks. I had so much expiring on the 20th and the previous week that I think I had 15 or 16 positions that I had to manage, and it became a lot more work to manage it with so many options expiring on the same day. So I'm going to try to disperse it more, and I think that that's really a good piece of advice. It's one thing that most people can do, and try not to have everything expiring literally on the same day like I did. Most of my positions were expiring tomorrow. I've been able to manage all the others. Those two I mentioned before, Southern Company and Ford, are the only ones. Now I own Ford, which I'm okay with. I'm going to start selling cover calls on it pretty soon here. Now the other thing is to deal with positions that are in the money, because of course this wouldn't happen if they weren't in the money. So part of managing these is trying to decide if you're going to let them expire, you're going to let them be assigned. If it's a good valuable company that you chose to, you looked at it and you made a choice that that's a stock you want to own. Well, you made that choice, and I've had the same problem. I give you another example. One of the other ones that I'm working with right now is eBay. And when I was selling puts on eBay when I first started, it was, I think it was in the mid 70s. Now it has dropped all the way to 45, and I do have some puts on it at, I believe, 60. So when it was 75, I was more than willing to own it, but now that it's 45, I'm a little bit reluctant. So I did roll it for 2 weeks to give me a little bit more time to decide what I want to do. But I was able to roll it. I did have to widen the spread. I think I went from a 60-45 to a 60-40 spread. But to me, what's important is the 60 put that I sold. If it gets assigned to me, it'll be at $60. I need to feel comfortable owning eBay at $60. But if it goes any deeper in the money, I probably won't have any choice but to let those get assigned. And the other thing that you can look at is how you want to roll things. Some advice that I got from a different channel, which I thought was really interesting, is I've always rolled, the same security out. I never, one thing that some people do is you don't necessarily have to roll to the same security. So again, I'll use the for instance on eBay. Now, if I don't particularly want to own eBay, I could roll, meaning close eBay, and I could sell a different option in a company that I want to own, and maybe those two would off balance each other. That's something I hadn't thought about. I'm looking at that with eBay. If I don't want to own eBay, but I still kind of like eBay, so I haven't made that decision yet. But if I do come to that decision, that's something I will look at. Maybe I'll roll it for Apple or roll it for another company that I'm interested in. Maybe Walmart. I know Walmart's come down quite a bit recently, and or Target. Target is, I think, come down 30% in the last couple of days. So those are the main things, and keeping track of those ex dividend dates and not waiting to the expiration to close or to roll. But there are instances like, again, what happened with me with Ford, where it will happen, and it's just part of the game. And hopefully you're earning enough money selling options that it doesn't blow up your account, and that it hasn't happened to me. Actually, Ford, I think, went up a little bit today, so it's not where I think. Well, I actually have some spreadsheets. Let's jump into the spreadsheets, and I'll show you those those two early assignments, and we'll go over each and talk about them in a little bit more detail. So let's jump into that next part of the video. So stay with me. Okay, so I've opened up the Southern Company spreadsheet. Actually, before we jump into this, let me just mention again, I've got a Patreon. I've got two different memberships. I've got a real basic membership that's $10 that gives you get to see all my trades. You get access to additional content, and then I also share all these spreadsheets and different things that I work on. And then if you go for the higher one, which is 25 a month, I do have a weekly call, and I do have a Discord where I answer questions. I answer questions in both places, but there's pretty lively discussion that occurs in Discord. So I encourage you to take a look. Links will be below. And that being said, let's go ahead and jump into this next part. So Southern Company, I've owned it a long time, almost 10 years. The ex dividend date was here, you can see right around 5/12, and that's when it was assigned. And before, what happened with Ford, and I'll talk about that, and I have a separate spreadsheet for it. This was the only time I was assigned early. It was related to ex dividend dates, and it was not keeping track of things, and I didn't have a planning worksheet. So me not looking in this one IRA account, I just overlooked it, and sure enough, it got assigned, and the shares got sold because it was a covered call. And but Southern Company's really high right now. It's I think its all-time high is around 73. So not bad. It's sold at a good price, and now I have more cash maybe to sell puts, especially if we hit the bottom of the market. Um, I just shared here all the different stuff that I did with the account. I've sold numerous covered calls, over $400 in covered calls since September of last year. And then here I also share the cost. It was, I guess I originally picked up the shares around, I guess it was, I think they were close to $30 each. It has done, I believe it did a split, and that's how I have 200 shares. So not bad. This of the two is less worrisome. I'm going to use this cash. I'm going to sell more puts and hopefully do even better with this account. So next, let's jump into the next spreadsheet. I've been selling Ford since it looks like November 17th, 2021. Yeah, you can see it here. So a little bit, about 6 months, maybe a little, no, almost nearly 6 months. And in those 6 months, I've made selling options 392, and then I had pretty good success up until I actually believe I could have rolled this one too if it hadn't been early assigned. So you can see it was assigned on the 16th, so which caused me to have to buy the 300 shares, and the strike price was 16, so I had to buy 300 at 16, which is $4,800. Here just above it, you can see that the outer arm, I actually were able to sell those and made $7. Not much, but I think it was a 16.12. Yeah, the short was 16 and the outer arm was 12. And you can see I had been doing it and rolling it for a fairly long time. I do have one more that's all the way out in 2024 at $10. So I do have one more put that's a leap put. Um, but I did fairly well with it. If you look at the what I brought in selling options and you look at the current value of the shares, I'm down about $500. So that's one of my bigger losses related to it. But that's all determined by the current price of Ford. So at 13, I've lost 500. But if it goes up back to 16, well, I've actually made a profit, and it keeps going up. I've done a little better. Of course, with this crazy market, who knows? It may keep going down. I hope it doesn't. But I believe today and yesterday it did go up a little bit. So I believe it's really close to 13. So that's Ford. That's, like I said, this rarely happens, these kind of assignments. And luckily, I had enough cash in my account, and I didn't get something along the lines of a margin call. Now, I did get a notice in my Schwab account. Something came up, as well as I got an email saying, check your account, make sure you have enough funds. It wasn't really a margin call, it was like a warning. But I have gotten margin calls in the past. It's been a long time, and that usually relates to if I didn't have enough cash, then I would have gotten a margin call, and then they would have told me, well, I have a certain number of days that I either have to sell something else or liquidate these 300 shares right away, again, taking the 500 loss right at that time, to have enough liquidity in the account to be able to cover all the different options that I'm selling at that point, all the put options especially. So it doesn't happen very often, these early assignments, but when it does, it can throw a wrench. And like I said, luckily I had enough cash, but in the instance you don't, you can also, I know with Schwab, they'll work right with you. So you can call them, they can give you ideas, and they can even loan you the shares depending on where you are. Let's say you do get a margin call, they may say, well, we'll loan you the shares for a certain period of time. And actually, they did that with me for Microsoft. I had a naked call, so it wasn't a covered call, and it was a call credit spread, and that's why I no longer do those, was because of Microsoft. But it went into the it went so far outside the money I couldn't roll it, and I think got hit again by the ex dividend date, and I did not have enough funds, and they actually lent me the shares for a certain period of time so that I could work things out, and I was able to sell Microsoft. It actually came back down a bit, and it minimized my loss a little bit. So I encourage you, if you do get a margin call with the crazy times we're going through, please be sure to call your broker, talk to them. It's not the end of the world. You can kind of work through it, and they'll come up with some things I've never thought about. That's one thing I love about Schwab. You can always get someone on the phone and they'll work with you. I actually found a bug in the Schwab system, and they wanted me to report the bug, and I actually talked to one of the brokers online and was showing him what was going on, and they fixed it the next day. So it was kind of another good experience with Schwab. So I hope you enjoyed this. I hope you're doing okay during these crazy times with the market. I believe the Dow may also be pretty close to a bear market too. I know the Nasdaq is close to 30% down. So I hope you're doing okay. I hope you're staying safe, and I hope you're having a wonderful evening. And thanks for joining me. And I hope you come back. Thanks.